An example of what we're going to be doing in Learning Objective 4 is we're going to say, how do we go from the general schematic of cost flowing from inventory or various stages of inventory into finished goods, into cost of goods sold. So we're going to be showing how we do the accounting. The example here is Haskell Builders, and they have beginning balances for the year, 14,000 raw material, 18,000 work in process, 15,000 finished goods, and 1,200 in manufacturing supplies. Then all these things occur during the year. So we're going to hop into Excel and do the accounting for how we would record these transactions. The first step is we buy raw materials at 45,000. I've replicated those on the left side here. And so when you buy raw materials on account, it's raw materials here plus 45,000. And then we also bought some manufacturing supplies of 800. So the total is on account, so we didn't pay cash. We owe people, our accounts payable, 45,800. Next, we requisition some of this into production. That form was filled out. We shipped the products, 34,000, and then it moves into production, 34,000. Notice that money is just going from here to here, right? That's what's happening. Next is we have employees that get paid. Well, let's pay them in cash, minus 19,500. But what did they do? Well, some of them worked directly on jobs, and that was 17,400. And some of them worked on indirect items, and they could be calibrating machines or the janitorial that come in between shifts, etc. And they do work necessary for manufacturing, but they're just not hands-on the product. And that's $2,100. All right. Next is we had additional overhead that was charged, and we had supplies that were transferred over. We take it out of supplies, manufacturing supplies, and we put it into this account called overhead. And then we also have, I might as well stack them up. And then we had also 600 plus 2,300 plus 4,200. And 600 we already did here. We reduced supplies. The next is we have depreciation, and that's a depreciation expense of 2,300. The next item is miscellaneous charges, and we'll just call that paid in cash. I missed both slightly just a moment ago. This 2,300 is depreciation. It's not depreciation expense. It increases accumulated depreciation, which this cell shows, but it doesn't go directly to the income statement as expense. It goes into the factory overhead, right? So the word expense was not technically properly used there. It's depreciation, but it is not charged expense yet. It's charged into an overhead account. All right, next we'll apply overhead, and the formula is done there using POHR, and the total is 24,650. And we take it out of overhead and we put it into the work in process, because we're taking money that is estimated and putting it into actual products that are being manufactured. That's POHR. And the next we saw that there's completion of some jobs, which means we transfer costs out of work in process into finished goods. So minus 81,050, and it goes into finished goods, 81,050. Again, moving through different stages. Finally, we sold some to a customer. How much was it? It was cost of 63,370, and that becomes the cost of goods sold. 63,370. And the sales price was 148. And let's say it was in cash, just to make it easy. Right? So that's the entry for a series of inventory as it flows from raw materials all the way through work in process, finished goods, and cost of goods sold. All right, we can now go one level deeper. In that prior example, I had one column called work in process. But what if we had job costing sheets? Here we're now going to break out further, one level deeper for the work in process for the jobs that made up work in process. We keep track of one job at a time, and as one job is completed, we close that out, take it out of work in process and into finished goods. If we finish one job, then that's fine, one moves. If we finish 20 jobs, that's fine, we close all 20 and move all 20 into finished goods. So let's look at an example of how that would have been applied to our example. Here, you may recall that we had these entries. We had direct materials, labor, overhead, and completed jobs. So when we look at the beginning balances for jobs 64, 65, 66, 67, 68, we had one job, this one, that had begun in the prior month. During the month, we started the additional 4 jobs and kept working on the prior job. And we applied the materials right here of this 34,000 into the 5 jobs. Next, we had labor. Labor worked on all those jobs, and we applied what did they charge by job. So those are charged in these kind of analogy of a sheet. And we applied overhead using POHR, and we applied those to jobs based on their use of the cost driver. Finally, if we finish the job, we zero them out. Notice at job 64, we started it last month, we added some costs, and then we subtracted all of the costs, so it goes to 0. Same holds for job 66, 67, 68. In all 3 of these, we finished them, so whatever was accumulated, we take it out, and that's now what it costs us to make those products, and we transfer it to finished goods. Oh, by the way, notice that job 65 isn't finished. So we started it this month and we added certain items, but we're not yet done. So notice this is blank because we have not yet completed job 65. Cost of goods manufactured is a overall summary of how much cost we put into products this month or this period, whatever our reporting period is. We look at current manufacturing costs and we have raw materials, beginning raw materials, purchases, minus end of month. So this is the amount of raw material we used. Next is direct labor. How much labor did we use on manufacturing? Next is the overhead applied through, say, POHR. This number here represents the cost added during this month in the 3 items of labor, materials, and overhead. We have also a beginning balance. So that in this case was 18,000. So the total amount of costs that we had during this month is beginning balance plus all the costs that we incurred. We had also ending inventory, $13,000 for that one job that didn't finish. So the difference of 81,000 is transferred out into finished goods. So this is just a summary of all the movements that occurred during the period for work in process. Income statement only had one item that we looked at, which was this one. It's when we had a sale to customer and we recorded it as cost of goods sold. When we deal with overhead, we have the issue because we estimated this before the year even started. We're probably wrong because it's difficult to know how many items they're going to be bought and how much the price would be. So first, the estimation of the cost is probably off. Secondly, we're estimating the total amount of the driver that will be used next year, that being machine hours, direct labor hours, etc. That also is likely to be wrong. The case of the POHR being perfect for every single job and every single cost for the following year is 2, slim and none. We have to make an adjustment for what do we do about over and under or under applied overhead. What we do is we keep track of things pretty diligently. We track the things we bought that are manufactured overhead, and those are the actual charges. And then we subtract from that the things we apply to jobs. And then whatever is the net difference, we make an assumption that we'll just flow it out all in total at the end of the year against cost of goods sold. So let's look at an example. In this example we just had from the manufacturing overhead side is this column is like one column in our template. We started with 15,000, we added labor charges, $2,100, and then we added these other items, the supplies, depreciation on the factory assets, and miscellaneous. And then we applied using POHR, 24,650. The net here is a negative 450. Let's pause for a moment. What does negative mean? Negative means your charges, which are the pluses, are smaller than your application, which is the negative. So in this case, we over applied. We charge more to the work in process inventory than we should have. And the end of year adjustment is to clear that to make it 0. And so we just put a plus 450, right? Whatever it takes to make it go away. So it's the same number, but the opposite sign. That 450 will serve to clear up the overhead account for the year, and it closes out to the cost of goods sold. So we end the year with 0, we start next year fresh, and we move on. When we look at service organizations, we have assignment of services and cost to a job. So sometimes you could be a law firm or a consulting firm or a CPA firm, and they use job costing to represent a certain engagement with a client. We use this as an expense, but we should be actually capturing it as job by job. And so this is the formal way that we would do in a service business. So summarizing Module 18, job order costing. First, we looked at costing for different types of organizations: service, merchandising, and manufacturing. They're all quite different, with manufacturing obviously being the most complicated. Next, we looked at the flow of costs and how the reporting works. And that's where we see the movement from expenditure to raw material to supplies, etc., then work in process, finished goods, cost of goods sold. Then we looked at the creation of the POHR, the predetermined overhead rate, and how that enables us to have some measure of how we're doing during the year before we really know all the overhead costs that we will be applying for the year. Third, we looked at production environment and product costing systems, and this is where we looked at the movement of those items through the system. And finally, we took one of the approaches to accounting for inventory, job order, and we applied job order costing where we have discrete projects, 64, 65, etc. And then we charge to it all the things relevant to that job. Is it the materials used, it is a labor deployed, and it's charged for the overhead that it used up. And that constitutes the amount that it cost us to do job 65, 66, etc. So that's what we did. Oh, and finally, we did an example of how do we zero out the overhead account for the over or underapplied manufacturing overhead. Okay, so that's Module 18, and I'll do a separate one for Mod 19. Thank you.